Hey everyone, welcome back to my channel. We're taking a dive into the Q1 stats of the real estate market of 2025. We'll cover what's happening in the US and we'll also zoom really hyper local down into our Big Bear Valley. Whether you're thinking of buying, selling, or just keeping up with the market, this video is for you guys. Let's get started. First up, the national picture. Homes in Q1 are climbing. Appreciation has gone up anywhere from 3 to 6%. If you ask me, I say the safer number is to keep that 3% in your back pocket and go off of that trend. You're going to have some outliers saying up to 6 and 7%. I would just throw those away. Let's just stick at 3% as a safe number across the nation. That way you can just have an easier number to track across the board. What does that mean for median sales prices? We've actually seen an increase for the average or for the median sale price to be about 395 to 425,000 per home. That's a very solid jump, but it's not what we saw in the COVID numbers. Now, home sales, that's a mixed bag. They're saying for existing homes, about 9% bump they're anticipating this year in sales. For new home construction, that's a little higher, 11%. Here's the twist though. In February, we actually saw a dip in 6.5% compared to year over year. Why the dip? If you ask a lot of people, and me included, I would have to say it's been the uncertainty of the interest rates. I've had a lot of buyers that their biggest objection would be, we're going to wait until the rates come down kind of thing. Which actually brings me to my next point. Mortgage rates in Q1 have hovered around the 6.8 to 7.2%. That's still high enough to what I call the lock-in effect. If you have that rate at 2.5 to 3.5%, it's hard for you to swallow that pill to jump and double your mortgage rate. Your buying power is a lot less than it was just a few years ago. Even with that said, though, I think people are getting used to that pill and are taking it because we're seeing an increase in inventory. We're not seeing as many sellers sit outside the market waiting to see what happens. But not every market's the same. Some cities you're seeing an uptick and some cities you're seeing a decline. So how does Big Bear Valley stack up? Here in Big Bear, I have some Q1 stats from 2024 to Q1 stats of now. So we can see the trends of year over year. And then we'll also go back to Q4 to see where we're at now trend-wise. Q1, we had about 172 homes to sell in the valley with the median house price of 540,000. This year, we're a little lower. We're 166 homes. So not a huge difference in the inventory that is sold. We're still very similar, but the median price has come down. Last year, we we're at 540. This Q1, we're at 485. That's a 10% dip. That's a pretty good dip. Homes are holding a little longer to sell. This time last year, we were about 75, 80 days on the market. Depending where you're at now in the valley, you can be anywhere from 90 to 100 days. Homes are selling about 2 to 3% below list price, which has been our average for a little while. So I wouldn't worry too much about that. That's not showing us too much yet. But what you have to take into consideration, even though you see a house that says 2 to 3% off list price, how many reductions did they take to get to their sale price? Because a lot of homeowners still think that it's a seller's market and a lot of buyers think we're going to wait. So you're having to educate both the sellers and the buyers to say, hey, no, we're not where both sides think we're at. Let's, be wise. Let's price our house if you're a buyer. Yes, we can get some off, but we're not going to come in 100,000 and just steal all these homes. But here's something interesting. Q4, we're actually lower. The median sale price of the home was 470. Now we're 485. That's showing us that we're having an uptick. What does that mean? What I'm thinking, I could be wrong, but what I'm anticipating, it looks like we might have hit the bottom and we're starting to climb slowly back out of the hole. This tracks with the national trend where houses are rising at 3% year over year. Okay, so I'm going to wait for the housing market to crash, especially in Big Bear. They're going to be waiting a while because now we're going into spring. So we're going to have an uptick of activity. We have lower rates that are happening right now. So you have more demand. Yes, you have more inventory, but you also have lower rates. You're not going to have that crash, especially up here. We've already had a correction, but right now it looks like we're coming out of it. And a lot of people have equity. So if they have to sell their second home up here, they can sell it. It's not like it was back in the day where they were underwater and they had to give it away. So I just don't anticipate that big crash that someone's, waiting for up here. If you're going to wait on the sidelines, you're going to have other people take advantage of the market and get a good house. All right, bro, that's a lot of good information, but what's the takeaway? Buyers, this might be your moment. Inventory is creeping up, so it's giving you more options, but if you wait too long into our busy season, you will have more competition. That's just fact. Sellers, if you look at the month supply of a lot of areas, you'll think it's a seller's market, but be prepared to negotiate. We're seeing a lot of negotiations and credit repairs. Buyers are asking for certain things and sellers are doing it. So make sure you fresh your home correctly and have it in tip-top shape, but you don't have to worry about those things. As we head into the warmer months, keep watching the market. Whether you're buying, selling, or just curious, knowledge is power. If you like this deep dive, please subscribe to my channel below. And if you have any questions, you can leave a comment or shoot me a DM. Talk to you guys soon. Peace.